Carolina, Mr. Timmons for 5 minutes.
Thank you, Mr. Chairman, and Chair Gensler, thank you for being here today. The SEC currently has rules that aim to prevent market participants from trade front-running. These rules help to protect retail orders from having the price move against them due to a participant trading ahead of the order and impacting the supply and demand for that security. Do you agree that such a prohibition plays an important role in helping protect retail investors?
I do think that rules against front-running help individual investors.
Thank you for that. But under the auctions mechanism that the SEC has proposed in December, detailed information regarding the characteristics of a retail order would be publicly announced prior to that order being executed. In practice, this would allow participants to use that information to legally trade ahead of the retail order. I find this astonishing. Do you agree that the ultimate result of the SEC's auctions rule would be legal front-running with prices moving against retail investors?
I understand your point, but I think that actually it could benefit investors and be part of a critical structure. We have auctions in the options market. We've learned from that. Those are, and look to see whether to have something and build on that in the cash markets.
Given your repeated statements on the need to protect retail investors, it is shocking that the SEC would issue such a proposal. I believe it's clear that the SEC should not move forward until a proper impact analysis can be conducted. Furthermore, as highlighted earlier by Congressman Lucas, there is substantial evidence to show that the SEC rushed this proposal without considering the real-world impact on the investing public. Moving on to rulemaking, the SEC's recently proposed rule on third-party vendor due diligence for investment advisors is concerning because it seems that the Commission again failed to consider the real-world impact. The reality is that the broad scope and significant due diligence obligations required as a result of this rule would force many small to medium-sized vendors out of their respective markets and push their clients to a few larger vendors. Many of these businesses don't have the capacity or resources to comply with the unnecessary and overly burdensome obligations. Are you concerned about the potential consolidation that could happen and subsequent risk that consolidation creates if there is an over-reliance on a small number of vendors?
I think we've already seen that in the markets, that there's a great deal of consolidation about outside service providers to the investment advisor.
We shouldn't facilitate that. That's not good.
So we already live in that ecosystem. What we're trying to do is ensure that the investment advisors relying on those service providers still do their role and comply with the laws and do due diligence on use of those service providers.
I have one final question, and I got to be honest, I don't know how you're going to answer it, so I'm kind of excited. But the fact that I don't know how to answer it, the fact that I don't know how you're going to answer it is actually really concerning. So in 2014, Jared Bernstein published an op-ed in the New York Times titled "Dethrone, quote, King Dollar," where Mr. Bernstein advocated for the U.S. government to actively take steps to remove the dollar as the global reserve currency. President Biden has now nominated him to be the head of his Council of Economic Advisors, all while the Chinese are actively undermining the dollar as the global reserve currency, and their successes are increasing both in number and at an ever-increasing rate. So, Chair Gensler, you have been in and out of government for 25 years. As well, you have ample experience on Wall Street. Do you agree with Mr. Bernstein that the U.S. government should take steps to actively remove the dollar as the global reserve currency?
I'm not familiar with the op-ed, but I think that we've benefited as a nation that the U.S. dollar has had such a central role since actually a little over 100 years now.
So no, you do not think that we should actively take steps to remove the dollar as a global reserve currency?
I'm going to go a little further. Okay. I think a lot of our agenda at the SEC is about ensuring that we go as many years, as many decades as possible, that we have the best capital markets. And I think the best capital markets undergirds our geopolitical standing and helps our dollar be the leading currency.
We agree. I really appreciate that. It's disappointing that the president is nominating someone that disagrees with both of our positions on this. I guess just real quick, if we do lose the dollar, the cost of import goods will skyrocket because foreign companies will no longer want dollars. We'll lose our ability to borrow at current levels. Inflation will be higher than it already is after spending trillions of dollars we don't have. Interest rates will rise. It'll crush the real estate market. All of that is bad, but even worse, our interest rate on our $32 trillion of debt would go through the roof. President Biden has nominated somebody that thinks that we do not need to have the position we have in the world. Thank you, Mr. Chairman. I yield back.
The gentleman from Nevada, Mr.